The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 7th terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. If you can't dial in, let those fingers do the walking. Go ahead, pick up that keyboard. Well, don't pick it up, just put it on your lap or whatever you got to do, and let those fingers do the walking. Send me an email at steve@tfnn.com. Inside the subject heading, please put radio show question, and in that Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 295 points. S&P's down 33. NASDAQ off 109. So it's red across the board, 1% or more. The biggest decliner is the semis, off 2%, a little over 2%, about 30 points to the downside. Spot volatility index up 10.5% as we speak right now. You'll be watching that one-day rate of change at the end of the trading session. Gold is flat or back 40 cents. Silver is flat or up basically zero. Light sweet crude is off $1.81. Leading the charge, the upside, Chipotle up $74, 14%. Fleet Core Technologies up 6% or around $12. IAC Interactive 4% or $8. Leading the charge dollar-wise to the downside, it is Booking Holdings 37, Amazon down 36, Proto Labs down 27, Google up 22. So certainly there are things to be looking at. Biogen, BIIB down $19. That's 5.6%. And that's how we're going to start the opening of the show. Not exactly, but it's kind of the segue into our first let those fingers do the walking, and that was Kay. Kay writes in, hi, Steve. Hi, Kay. I'm short IBB, so let's go ahead and put the let's put the IBB up on our screen out here. Trading right now at 107.43. So I'm short at 109. Can you look at this for me, please? Yes. If it breaks 106.50, what's the next stop you see? Thank you so much. So Kay was aware that at the 106.54, to be exact, is a level of support. The actual low today, 106.63. Now, in my book, that qualifies as a test of support. A test of support. In fact, when we're going to go take a look at the indices out here, for those that would want to buy the dip, I'm not suggesting that you do that. I'm not suggesting that you do anything. But if you did want to buy the dip and you wanted to buy the dip on the IBB and you were looking for the first level of support, it's 106.54. Now, what do we know from a volume perspective today so far? The last time that price was down in this range was just a couple of weeks ago, or January 30th to be specific. Maybe that was just a week ago. 1.7 million shares. You're already at 1.7 million shares. So price is pushing into support with resistance. Didn't test the bottom of that swing point. Doesn't need to because we've got this TAS market profile. But the work has been done by the sellers. The question is, the question that Kay asked was, hey, if I close below this, where is the next level of support out here? Well, in the case of the IBB, As I take a look at some other tools on some other screens out here, if we take a look at the market profiles, for example, one number we would give K would be 102.56. That's the center line of the weekly box. 102.50, that's the bottom of the monthly profile. So you got two in the 102.50 level. So if there's a break below 106.54, then K, we're going to go with that 102.56 level. You must recognize, though, there is a sign of strength out here, a small sign of strength. January 7th, when this gap to the upside with 3 million shares. So there could be support as well on a break of 106.54 in the 103.03 area, 103.03 to 103.68. So I hope that helps you out. Best of luck with that trade. Again, a price has hit support. Now, speaking of support out there, let's go take a look at the markets. What are the markets doing? Well, you know, and I know, and Dave Mason knows this as well. In fact, he was playing in town the other night down in Fort Lauderdale. I didn't know that until I looked at my, hey, what bands are in town yesterday. I was like, darn, would have enjoyed going to see old Dave, see if he still's got the vocal cords going. And, you know, in any event, how does that have anything to do with support? Well, as you and I have been discussing here, we know that Stevie's red line, we're taking a look at the ES Mini, by the way. We can go take a look at the S&P 500, doesn't matter. But right now, we take a look at the SPY. Well, we're going to look at the ES Mini. And what you know and I know is that red line turned green. Well, let's get the cursor out here. Let's give you sort of the exact date, that little doji date it looks like on January 29th. And that told us that over the coming trading sessions, didn't tell us how many, turned out in this case to be about 5 or 6 or 7 trading sessions out here, the price was going to pull back and test support. And in essence, that's what it's done. Now, the real support level, numerically speaking, is 2863. 50. Our low so far today is, can I see it? Drum roll, please. That can 26.85. Yeah, 26.85.50. So within $2. Does that qualify as a test of support? Yes. If we're going to see a change in trend, you're going to see a close below Stevie's green line out here. Otherwise, be careful out there. Otherwise, today's test would generate a bullish message. Yeah, that's exactly what I said. Now, I'm not telling you that it's going to bust out the highs out there, but what we have seen so far at 1:13 in the afternoon is a test of support. Again, I'm not saying take any action out here, but you're going to want to watch this level. If you were a short-term trader, as an example, like Tom G, he's one of our short-term, does a number of short-term trades out there. He must have been licking his chops if he was short, whether he was trading the TVIX or whatever IX or whatever VIX product there was. He would be taking a look at this and saying, you know, that ES Mini came right down to Stevie's green line out here. I think I'll take my profits. That's what a short-term trader would do. And Tom would say, you know, I'll wait for price to break through, close below Stevie's red line before I hop back in. So far, what we've seen in the markets today, as far as the S&P 500 and the ES Mini, is nothing more than a test of support. Is this a change in trend or not? Let's go look at one more thing when we come back from this break that you and I can look at to answer that question. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So if we take a look at another instrument that was testing on a daily basis, that was testing support being that oscillator and change line, that red dash green line, we could take a look at the Russell 2000 equity futures contract, and we're going to see that that was an exact test of that support level. Now, right now it's priced at $14.92.50. It'll change by pennies or maybe $1 here or there. What the chart doesn't tell us is whether or not support is going to hold. At this stage, it's held. The key is if there is going to be a change in trend, you're going to see a close, not a test intraday push below it, but an actual close below Stevie's green line out here. At this stage, the test that was supposed to unfold to tell you whether the market was bullish or bearish has occurred intraday. I don't know what the end of the day looks like. You do need to know what the end of the day looks like because this is a daily time frame chart. But what we can say as of 119 is be careful because what you got was a bullish test. Again, this doesn't say that things are going to break out to the upside. In the case of the Russell 2000 equity futures contract, if price were to close above the December 4th high out here, that high, by the way, that price is 1549.30, that would tell you you've got a breakout going on. It would just be an absolute breakout to the upside, more upside action to come doesn't tell us for what length of time. Again, you get it close below 1492, and what it does is it brings the January 4th low into play. That's 1325. So how are we going to know? Well, we really won't know until we see whether these levels fail. What else is that we can look at out here? Now, even though Jay hasn't asked me in the Tiger's Den, I was waiting for you to ask, but he just knew I was going to do this anyways. I know the question was going to be, hey, what are the profile levels out here? Now, I'm going to go ahead and get rid of these old resistance levels. Could be new support. Those are the yellow horizontal lines out here, just so that you can, just like a card player out here, you can see no tricks up my sleeve. Well, wait a minute here. Now, what we're looking at is the daily time frames for the ES Mini, for the NQ, for the Dow, YM, for the Russell 2000, and you're going to see no new profiles. No new profiles, Jay. What do you say to that? Well, you're welcome, even though you said thanks, but wait, there's more. Because Stevie always does have a trick up his sleeve. Well, not always, but in this case, Stevie does. and I'll share this with you. And it was nice to be able to share this with subscribers this morning to let them even know it had huge internet issues out there. God, when the internet goes down, it's a problem, isn't it? And but what we were able to do was Stevie was able, because of the tools that the subscribers get on a daily basis, which lets them know for multiple time frames where levels of support or resistance are, so it can assist them in their trading. What I did was I went back and took a look at my composite symbols out here. Now, these are the symbols that take a look at these equity futures contracts, and they stitch together all the prior contracts out there. That's why when you look at my symbol name, it looks kind of strange compared to the other ones out there. Doesn't make this right or wrong. What it does do for us is it gives us a sneak peek into the future. Now, what you'll see out here, and what you'd want to go ahead and notate on your pieces of paper out there, J and others, are the blue numbers in the data boxes out there. So, for example, in the upper left-hand corner, which is looking at the ES Mini, you're going to see 27.26 and change is a new resistance level. That's the top of the box. If you look at the bottom, you're looking at 26.83. So the cool news is the low today is 26.85.50. Price has tested resistance and support. So we really don't know which way it's going to go. If you're an intraday trader out here, you're saying, okay, this is interesting. Maybe I should take some profits out here, since maybe I already did, since we're close to the low. We got Stevie's red line to deal with, and we've got the bottom of a box. Why is that important? Well, with regard to a change in trend out here, we haven't seen it close below a bottom of a profile since we came off the lows in December. When you do close below the low, it doesn't guarantee that you've got a change in trend, but it sure does increase the odds. And so, should we see it close below? It doesn't have to be today. Now, here's the caveat. This profile could change. It could also disappear come tonight. So this is like a advance. This is Jay's crystal ball. This is your 8-ball out there, and your 8-ball says, I don't know, well, how would it properly answer that question out there? In this case here, we're just going to say watch 26.83. It closed below that, says we've got a change in trend. Otherwise, says today, nothing. This has been nothing more than a test of double G support out there. Now, we have the other equity futures contracts as well. The NQ has not gotten down to test the bottom of its profile. That's at 68.27. In the case of the Russell 2000, of the 4 profiles up here, it happens to be bullish. What do I mean by that? Well, you know what I mean by that. I mean that the center of the box is closer to the bottom than it is to the top, and the work to the downside has been done by testing Stevie's red line, by testing support out here. Now, we could be in just a little sideways range, that sideways range inside the Russell 2000. 1489, we'll call it 1490. The low today, 1492. And the top of that range, 1519. 1517 has been the high thus far today. So it's a tiny range out there. But it's a tiny range that means a whole heck of a lot, whether price closes over the top or below the bottom. So hopefully that assists you in your decision making out here. We don't need to get ahead of the game. We just need to know what to look for to confirm for you and I. As you know, I maintain that at some point in time in 2019, we're going to go down and test those 2018 lows. We may not take out the bottom, or we may, but we're going to do it. Did it start today? I don't know. I'll know, or I would say to you with certainty, as much certainty as one can say, we get it closed below the bottom of these boxes in Stevie's red line, then we know what the answer is, or what the likely answer is, because we can never control everything out here. So what did, and what caused all this? What caused the move lower out there? Was it media reports and things of that sort? Whatever it was, you knew, certainly if you were a subscriber, you knew exactly where support was this morning. When I finally did get the newsletter out, you knew exactly where it was for the Russell, for the ES, for the Dow, and for the NQ out there. So what else is it that we get to look at? Really not much, I would say. We certainly can go take a look at that spot volatility index right now. It's up 1-day rate of change of 10.86%. I don't know whether we will finish above 10% or not. If we do, you know what the game plan is. If you're short, especially if price hasn't closed below the levels of support that you and I looked at, you know to anticipate a bounce or bottom in the futures market out there. Now, that really would help short-term traders out there. Really help it. What happens if it's less than 10%? Well, then we really can't use this as a piece of information to assist us in our trading. We have to just simply fall back to those things that you and I have already looked at. You know, that's a great question. Somebody said, how's that New York Stock Exchange doing? Its advanced decline oscillator reading is still in bullish condition, above zero. We'll be right back, folks. The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the email lines are open. No requests out there, none inside the Tiger's Den. Yesterday afternoon, as we were closing out the show, or towards the last segment, we were taking a look at Goldilocks. And we still have the yellow line on my screen out here. And that yellow line was a clear breakout area because you had wide price spread and accelerated volume. This was at 2 o'clock, so this was during the Fed release of their before Powell, what the Fed was going to do before Powell's actual interview out here. And we said that the bottom of that session, which was 13.50, if we saw a close below that, price was going to head lower. We even identified where price was going to head to. Now, what we can see here, this was at 1 o'clock, and price was testing that level. And this is a 60-minute chart. By 2 o'clock, that area, 13.50, had failed. Now, we gave you the price target of where price was going to head to, so that way somebody there was, at least if they're going to take a trade to the short side, it was going to be very short term. And the reason is because we said 1306.30 was the number out here. Now, since the move below that support level, the actual low has been 1306.40. And I want to deeply, I'm sincerely apologize for missing by 10 cents where price was going to head to. Now, just like we took a look at the ES Mini, the Russell 2000, we didn't spend as much time on the Dow and the NQ because price didn't come back and actually test that support level. Well, in the case of the gold contract, it's just like the Russell and the ES. Prices come back to support. I don't know if this is going to fail, just like I don't know if it's going to fail inside of the equity futures contracts. But if it does, if you were to see it close below 1306.30, then we've got much lower to run. Well, much lower. What are you talking about, Steve-O? You know, good question. If we put the weekly time frame out here, let's see if there's some weekly numbers that we can use. Well, you got 1306.50. It's the top of the weekly profile. So what we would suggest is that if we get inside or close below tomorrow, 1306.50, right, and we'll use the daily profile number as well, then we're looking at about 1281 to 1273. What's transpired so far inside of gold? Exactly like what has transpired inside of the equity markets. It has been nothing more than a test of support. I can't reach any other conclusion. Is there anything I can figure out on a shorter term time frame out here? Yes and no. I mean, if we look at the 30-minute time frame chart, let's go see what it says. Then I can tell you whether it's yes or no. But here's the 30-minute time frame chart, and on this, all that we have labeled are those TD9 counts out here, but really their resistance and their support levels out here. And so we can see the most recent one, the most recent green dashed line, which was at a price level out here that was formed at 7:30 last night as price was moving lower, and that was up at 1311. And as soon as price was able to bust through that, which it did at 8 o'clock this morning, what price did was it ran right up to its most recent support level that it broke through yesterday at 1:30 in the afternoon. This is a 30-minute time frame. Remember, we were just looking at an hourly time frame chart, but here we can see the close below the horizontal. We can't call this one Stevie's red line. That this horizontal level of support, and that's just when support broke, the floodgates open. It went down to the other level of support. In this case here, it was a daily time frame that you and I had identified. So what we've seen so far is really price old support has now become new resistance. We can clearly see that as we take a look at the charts. So in essence, we're kind of in no man's zone out here. We don't know whether prices bounced up to where it should have after hitting support, and now on a short-term basis, it's hit a level of resistance. So not until we see what gold is able to do are we going to really be able to make any kind of confirmation. Now, when we take a look at the hourly, the 2-hour, the 5-hour, the daily time frame chart out here, this says you've got real resistance even on any further counter trend rally in the 1317.70, 1319.90 area. Those are the tops of those boxes for those respective time frames out there. And the 5-hour one just formed, or maybe it formed at 9 o'clock this morning, so to speak, out here. It's bearish and resistance. So watch 1319.90. If price bounces up that level, fails, and starts moving lower, you've got a retest of the support level in that 1306.30 level. That's what Stevie sees when he takes a look at Goldilocks out there. And speaking of Goldilocks, not that we were speaking of Goldilocks, but the GDX. So what do we do about the GDX? Where did that chart go? Let me change pages out here. So just to try to tie two things together. The GDX, we've talked about Stevie's red and green line. Now, in this case here, it doesn't have the same impact as what we looked at on the equity futures contract, because you can see this line has been green for a long period of time. But right now, price is below Stevie's green line, which is at about 22.21. We're at 22.10 right now. This is suggesting to you and I that price is going to go test 21.75. Now, I don't know if it's going to break that, but that's the bottom of its profile out there. Unless we're going to see it close back above 22.21, odds favor move back to 21.75 inside of the GDX. Same thing in the Nugget, although in the Nugget out here, it's a different price number, but same pattern. And that would be a push back down to about 1784. So if you're long those vehicles, just anticipate that that's the message as of 1:36 in the afternoon so that you can make your decisions. Maybe it's to load up more. Maybe it's to lighten up on the loafers. I don't know what it is, but just anticipate that that is what is likely to occur out there. What else? Let's go take a look at that light sweet crude, because that's trading down $1.68 out here. We take a look at light sweet crude. What is it doing? Does not look good. I think yesterday what you and I looked at out here for light sweet crude was that it was trading into the bottom of its profile. Now, remember, when we took a look at this profile, it was bullish in structure. Again, let's simply just turn off price. We can see that this structure of this box, that center line, much closer to the bottom than the top. And now what we're seeing today is a change in trend inside of light sweet crude. As long as price today closes below 53.39, we're at 52.62. So then where is price likely to head to out here? I don't know. I might have to put up my synthetic contract to really give us a good idea. And I probably should do that, but I would want to do that on a different chart. So if I'm going to do that on a different chart out here, let me switch over here, because I think I've got it. I think I've got it. Do I have it? Yes, I do. Now, let me see. I've got to add a tool here so that we can take a look at. Now, in the case of light sweet crude, you can also see the descending trend lines. This is the daily time frame we're still looking at. But what I want to do is put up this tab right here. And that's just taking a look at the daily. So that's not going to help us. So we don't really want that. Oh, that's not the daily. That's the monthly. That's the monthly. So I don't want the monthly. Let's see the weekly out here. Let's take a look at those weekly profiles. So, no, the weekly was right. So 52.31 is the bottom of the weekly profile. So it's really, light sweet crude is really sitting at a support level. And below that, I don't know. I'd have to go do further research. Steve Rhodes with TFNN. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's off 282, S&P's down 32, the NASDAQ 100 off 109. We're going to spend some time there. Now, instead of going and taking a look at the indice out here, I want to point out something that should be of interest to everyone. Now, what we know, again, just to summarize where we're at 142 in the afternoon, is that the price decline that we've seen today has been nothing more than a test of support. Now, key support, because should there be a close below those support levels, that would tell us that there's a change in trend. We don't have that signal as we speak right now. The question is it prophetic, not pathetic, but prophetic with regard to the QQQ series ETF? Now, the QQQ series ETF today completed a Gartley sell pattern. What do I mean by that? Well, Gartley sell pattern is going to have an A to B equals CD. It doesn't tell us which level that's going to be, whether it's 1 to 1, 1 to 1.272. But what we can do out here is we can just simply take a look at the A to B equals C. The B point out here was on January 2nd. The C point was the following day on January 3rd. Well, I didn't realize I had a smaller version of this out here, but I do. And so 1.618. Let's just put number 2 out there. There we go. Okay. But here's where you can see the A to B equals CD. And this was between a 1.618 extension. What I mean by that is if you take a look at the move from the low of December 24th to the high of January 2nd, that gives you a price measurement, which is between 155.75 and 143.46. I don't know what that value is. 12.69. Does that sound about right? I don't know that that's right, but probably $12.69, mathematically speaking. And you can add that to the C point at 149.49 out there. Well, you can also do an expansion of that. You can take that 12.49, multiply times 1.272 or 1.618, which would take you to the 169.38 level out there, or multiply times 2. Take you to the 174.07 area. We use this really as a guideline. Now, look, this is not the first time that we've seen a bearish reversal candle. That's what's required here. Well, it's really not required, according to H.M. Gartley. And what H.M. was just simply looking at out here was looking to say, hey, if you didn't catch a huge leg, in this case here, the leg was a leg to the downside, and that leg to the downside was from the price point of, in the Qs, which we're looking at, 187.53 from the trading session of October the 1st down to the low on December 24th. And in the HM didn't have anything about the retracements. That's a Larry piece. So Larry's added the retracement levels, the Fibonacci levels, just because he's buddies with Fibonacci. In my case, you know that my favorite beverage, it's water, But in the evening time, it's Japanese water, otherwise known as sake out there. And so therefore, I'm King Sake. And in this case here, I like Japanese candlesticks because they communicate to you and I that a pattern has completed. Well, what we got today was a gap to the downside. Now, I'm going to undecorate this chart out there, but you can see, or you should be able to see, the Gartley sell pattern that is in place out here. And again, it was communicated to you and I so far today. We don't know what the end of the day is going to look like. Maybe we don't end up with a gap to the downside today. We probably do, but maybe we don't. But what's really interesting, and you've got to have a keen eye, and I do mean a keen eye out there, what somebody may have recognized, and if you didn't, I'm going to share that with you. If you look at the actual high from February 4th, the actual high in the QQQ, by the way, it's the same thing inside the NDX, but inside the QQQ, 169.53. Now, if you look at the low on the very next trading session, the low is 169.69. You kind of see where I'm getting at? There's a small little tiny gap there. And with today's gap to the downside, the high today, 169.45. That's below 169.69, the low from February 5th. And so what we have out here, we've got your old-fashioned island reversal candlestick out here. Now, that's not really a Japanese candlestick, the island reversal. We take a look at it, but what it is regardless of whose it is, it's bearish and can be very bearish. So the question is this prophetic or is it just simply a pathetic attempt at showing you and I a high out here? Well, I don't know the answer to that. What else do we know about the QQQ series ETF? And I ask that because I'm asking that because I don't know. Well, one of the things that you and I can look at out here is we can go take a look at Stevie's red line on the Qs. Now, remember, I said that the NQ didn't really test its level of resistance out here. And to a certain extent, neither did the Qs. But PDC, right? Pretty darn close. 166.74 is a number. So here you can see you've got the gap to the upside, the gap to the downside. It really wasn't Stevie's eyes. It was just simply the tools that I have on my screen to say, let me go see. There is an island reversal. Now, it's in the NDX. It's in the NASDAQ composite. It is, if I look around, where else might it be? Is it anywhere else? Is it anywhere else? It is in the composite. I don't see it anywhere else. Just in those two indices out here. So we'll pay attention. But the thing about paying attention to it means, hey, we've got this confirmed Gartley sell pattern. 166.74, that number is going to change just slightly. A close below that says you've got a change in trend underway. You don't get a close below that, well, all we have is just a normal retracement. You see, that's really the beauty of Stevie's red line, which I'd love to teach you the exact details for, help you get access to this, because, look, the reality is we're all in this together. I got your back, you got my back. We're all sitting here. It's us against them, whoever them is. Well, it's just simply us against, them, whoever them is. And so that's why we do these shows and share these tools with you and share educational tools with you and so forth, which is why so many folks have taken advantage of the 2-week offer that we've got, the free trial offer to subscribe to Mastering Probability, because you're getting access to tons of education out there. And that's what it's all about. All you need is one morsel. I learned all this stuff one morsel at a time out there. So I'm not going to ask you to do anything that I haven't done. If I can be the market timer of the year, so can you. There really was no secrets, and I share all those secrets with you, and so that you too can just simply improve your timing, just simply one step at a time. So we'll continue to pay attention. Is this? We don't have that in the futures contract. It would be unusual. You'd pretty much have to get a weekend in order to get the reversal. Tucker says, I always thought an island reversal had a gap on both sides. It does, Tucker. It does have a gap on both sides. So let me go through that again, because I wasn't clear, and I want to be clear out here. The high on December 4th, or maybe I'm wrong. Let's go check it out. The high on December 4th is 169.53. The very next day, the low is 169.69. Got it? Oh, perfect. You see it now. So we got a gap there. And that gap is unfilled. And so we've got a 2-day island reversal MON. We got it in the Qs. We have it in the NDX 100. We've got it in the NASDAQ Composite. But those are the only spots. But it's important for us to pay attention to that. Again, we don't know if support is going to break. We know that support has been tested in a couple instances today. The cool thing is, if this is a change in trend, it's going to last for more than a day or two. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So kind of quiet out there in audience land out there. So hopefully I'm not putting anybody to sleep. But I know that somebody, well, maybe I'm putting somebody to sleep. But I know that somebody, it's a crystal ball. I can just sense somebody is saying, okay, Steve, I get everything that you're saying out there. Is there anything that you can share with me right now at 154 that might help me understand whether, since support is held, we're going to see more counter trend rally coming into the end of the day? You know what? I think that is a great question, and I'm glad that you asked that question. About the only thing that I can find, I haven't spent a lot of time looking, but one of the things that I can find, because these are tools that you and I use out here, is let's go look at the short-term time frame charts. So we know that the ES Mini, as an example, on a daily basis, came down and tested support. The question is, what do we have to watch next? Now, on a 30-minute basis, here's what we can see. And you can see I've turned price off. Again, we don't need to know what price is doing just yet. We need to know what it is that we're looking at. And on a 30-minute basis, we're dealing with a bearish structured profile. The center of that box, by the way, let's just go ahead and let's just put a little yellow rectangle around it. Here's where you're going to get the answer, or you should get the answer. You got a new profile, 2698.75. 2695.50 is the center, and 2688.75 is the bottom of the box out there. Bearish in structure. If price closes over 2690, we'll call it 2699, okay? On a 30-minute basis, that would be another 5 minutes from now. Then that says you've got more counter trend rally to go. Otherwise, what we've seen so far is a test of support. And you can take a look on this 30-minute chart, and you can see there are no closes above the top of those profiles. Well, the last time you saw that was back here around 7 in the morning yesterday. We're not dealing with that. You can see that the tops of these boxes have held as resistance. So hopefully that'll assist you and answer that question, especially for an intraday trader. Folks, thanks so much for being here. Stay tuned. My favorite polar bear, David White. He's up next, the Power Trading Hour. I love that. And then Tom O'Brien, 3 to 5. I'll be back with you on Fun Friday. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.